In this set of video tutorials, we are going to discuss depreciation expense in a bit more detail, primarily the depreciation policies that are followed by various companies. What we have seen earlier was that companies do follow straight line method of depreciation, and this is primarily used for the financial reporting part. However, you will also understand and probably note is that many companies use something called the accelerated method of depreciation. Now, what is the difference between accelerated method of depreciation and straight line method of depreciation? Straight line method of depreciation assumes that the asset is being used equally, and hence the depreciation expense should be equal number across its useful life. However, in most cases, you may note that the assets may generate higher benefits in initial years. So if that is the case, the expenses should also be matched accordingly. So expenses should also be higher with respect to the buying of the asset in the initial years, and lower when the asset is not providing higher benefits, in fact lower benefits in the last few years. So accelerated method of depreciation versus straight line method of depreciation. So when we want to kind of calculate the depreciation expense using the straight line method, the formula goes as follows. It's basically cost minus the residual value. Residual value is basically the salvage value. Say, assuming that if you own an asset and it has a useful life of 5 years, after 5 years you may actually sell this asset at some scrap value, or probably some value greater than 0. So that value will be called as a residual value or salvage value. Okay, and the depreciation will be calculated as cost less the residual value divided by the number of years. So this is how it can be calculated. So say for example we have an asset that is worth $12,000, and let's say the salvage value or the residual value is around $2,000. So what will be the depreciation? Assuming that useful life is 5 years, the depreciation expense which will be charged in each year will be asset cost minus the salvage value divided by 5. So let me kind of make this in a tabular format. Year 1, 2, 3, 4, 5. So this is straight line SL method, straight line method. So depreciation will be 12,000 minus 2000 divided by 5. So this comes out to be 2000 each year. So this remains constant for all the 5 years. Now let us look at the accelerated method of depreciation. So one of the famous methods for accelerated depreciation is the double declining method. Now in this method, what we assume is that it will, or the asset will depreciate by double the speed as compared to the straight line method. So there's some tweak in the formulas as well. So let me write this as double declining method, and the depreciation formula would be something like this: 2 divided by the useful life. So we are saying that this factor 2 divided by useful life will depreciate by double the speed, and this multiplied by cost minus the accumulated depreciation. So this is the formula for double declining method. Let us try to apply the same double declining method in the same asset that we had looked at earlier. So in that asset we had the asset value as 12,000 and salvage value was 2,000, and the useful life is 5. So let's apply this method. For this I'll create a table first. This table will consist of opening balance, the opening balance, and then depreciation, and then we also require the ending balance. Okay, so what happens in year 1? The opening balance is 12,000. What is the depreciation at the end of year 1? The depreciation would be calculated using this formula. So this would be 2 divided by 5, 5 being the useful year. This multiplied by cost minus the accumulated depreciation. So cost is essentially 12,000 less 0 because there is no accumulated depreciation till date. So the depreciation comes out to be 4800. And what we note here is that the ending balance is 7200 now. Let's now look at year 2. What is your opening balance? Your opening balance is the ending balance of the previous year. So this comes out to be 7200. Now what will be your depreciation here? This will be in year 2, 2 divided by 5 again, multiplied by, bracket open, this is the cost minus your depreciation value. The accumulated depreciation till date is 4800, so you can add this up. So you get 2880 as the depreciation expense for year 2. So what is your ending balance? Your ending balance comes out to be 4320. Let's do the same thing for year 3. Opening balance is 4320. Your depreciation expense will be equal to, applying the same formula, 2 divided by 5 multiplied by cost, which is 12,000, minus your accumulated depreciation. Your accumulated depreciation is 4800 and 2800. So we need to sum total these two. This is the accumulated depreciation, and bracket closed, and what we have is the depreciation expense of 1728 in year 3. Your ending balance comes out to be 2592. Let's look at year 4. Year 4, the opening balance would be 2592. Let's look at the depreciation expense. It will be 2 divided by 5 multiplied by, bracket, cost minus the sum of all the depreciations till date, that is called as accumulated depreciation, and bracket close. So what we see is that the depreciation expense is 1037 and your ending balance comes out to be 1555. Now I'll just take a pause to highlight a basic mistake that we have actually done while we had calculated the depreciation expense of 2004. Closely look at the depreciation expense of 1037 here. The total depreciation expense that has now been charged is equal to, if you look at the sum total, this is 10445. So this total depreciation that has been charged till now is 10445. How much is the total depreciation that can be charged? Look at this. Asset is worth 12,000, salvage value is 2,000, so the asset will depreciate to an extent of difference between the two. 12,000 minus 2,000, that is 10,000. This is the maximum allowable amount of depreciation. So 10,000 should be the maximum. However, we have landed in a situation where we have already charged in excess of 10,000. So what we need to look at is this highlighted number in yellow. This needs to be a plug figure, would ensure that the total depreciation is not greater than 10,000. So I'll put a plug figure by calculating it in a reverse way. 10,000 minus the sum total of the earlier accumulated depreciation. So my depreciation amount comes out to be 592, so that my ending balance is 2000. Let's look at year 5. Your year 5 beginning balance will be equal to 2000. Depreciation here will be 0 because all amount that could be depreciated is already gone, so this will be 0 here, and the ending balance will again be 2000. So this is how the profile of depreciation will be like when we talk about the accelerated depreciation method. So let's quickly compare both the accelerated and the straight line method. I'll probably link this up. Accelerated depreciation method. So as we can see, there is a higher depreciation method, higher depreciation charged in year 1, higher in year 2. However, when it was about year 3, 4 and 5, lower depreciation amount was charged. So if we could quickly make a graph and see this visually, we'll probably be able to kind of represent this in a much more meaningful way. So the red line essentially corresponds to the accelerated depreciation method, higher depreciation in initial years. The straight line method of depreciation is just about charging the constant depreciation expense for all the years. So this is the main difference between the two. So one passing remarks here we did was something like a double declining method of depreciation. If we were to use a triple declining method, how would the formula change? Please remember that it can be triple declining or maybe 1.5 times declining method. What we looked at was the double declining method, and the formula was something like this: 2 by 5. So if this was 2 by 5, it was called as a double declining method in the initial part. If it is 3 by 5, this will be a triple declining method. And in addition, it can be any number, 1.5 times declining method as well. So please note that whatever the declining method has been specified, you apply the formula appropriately. The only change comes in the first part, which is 2 by 5, 3 by 5 or 1.5 divided by 5.